Hello and welcome to Explain the Charts. Today is April 10th, 2025, and we're taking a look at GBPUSD. We're going to analyze the recent news and events surrounding the pair and then dive into the charts to identify potential trading opportunities. Recent news indicates that the US dollar has been testing new lows due to lower-than-expected inflation data and concerns about tariffs. According to FX Empire, pound sterling to US dollar is rising due to the dollar's weakness. FX Street also mentions concerns about a potential trade war and the impact of tariffs on the US economy. Let's jump into the charts and see how this news is reflected in price action. We'll start with the one-day chart to get a broader perspective. On the one-day chart, we can see a clear downtrend recently. We had a large drop starting late March 2025, continuing into April. The price has fallen from around 1.30 to as low as 1.244 in a short amount of time. This might be related to reports saying that Trump's policies could weaken pound sterling to US dollar. Now, let's switch to the one-hour chart for a more detailed view. Looking at the recent price action, we can see a slight bounce back from those lows. Zooming in on this bounce in the 15-minute chart, we can examine the potential for a short-term bullish reversal. However, given the larger downtrend on the daily chart and fears about UK growth being impacted by US tariff policies, we have to be cautious. Key price levels to watch out for include the recent low around 1.242, which could act as support, and the previous high around 1.30, which is now resistance. Given all this, here's my assessment. Short-term, we might see a continued bounce towards 1.26, a key level of resistance, with a likelihood of around 60%. This scenario would be reinforced by further weakening of the US dollar. However, if the price fails to break above 1.26 and breaks down from the recent low around 1.244, a retest of lower levels, potentially down to 1.20, becomes more probable, at a likelihood of 70%. Long-term, the outlook remains bearish due to the anticipation of Trump's policies and sluggish UK growth, as mentioned in recent articles. Watch out for any shifts in central bank policies, especially signals about interest rate cuts, as well as any developments in trade negotiations between the US and the UK, as these could drastically alter the outlook. That's all for today's episode of Explain the Charts. Remember to always do your own research and manage your risk. Thanks for watching.